Hi there and welcome to Understanding the Stock Market. Maybe you noticed something special about the thumbnail I used today. Maybe not. Well, that's the chart, the stock chart for Snap in the last week. If you follow Snap, then you know that in last week they presented their third quarter numbers, and they weren't good. Well, or were they? The market didn't think so. Not that day, anyway. The stock fell 30% that day. Is that how should I put it? I don't know how to put it. If I say like this, their third quarter was almost as expected. But anyway, the stock fell 30%. How should you understand that? How is that possible? 30% of the company's value is gone in just one day. Well, maybe you shouldn't understand it. Because what happened the days after that? Well, as you can see on the thumbnail of this video, the stock went up again immediately the following days. I'm an owner of Snap, and when I saw the stock fell with 30% last week, I immediately read all about it, and I didn't understand it. So what did I do? Of course, I invested more in Snap because I didn't understand why the stock should fall with 30% because of those numbers for the third quarter. I didn't understand it, and obviously I was right. Now, 1 week later, the stock price is right now $9.60. I bought the stock for $7.60 1 week ago when it fell, and that means that the stocks that I bought 1 week ago in Snap now have increased with about 30%, as much as the stock fell in one day last week. It was an overreaction. Snap is not the only overreacted stock nowadays. The stock market is very, very nervous, and just a little thing can cause dramatic changes in the stock price, not only for Snap but for several other companies as well. When I buy a stock in the US stock market, I'm not in this for the short term. I mean it for the long term. You say it like that? Long term? Yeah. And what do I mean with long term? I mean, in my case, I mean 1, 2, 3 years. And how do I reason about Snap, for example? I have 23 different stocks in my US portfolio. Snap is one of them. And with Snap, I reason like this. Right now, we're going into a recession. Companies don't advertise that much, and they don't advertise that much in social media either. Snap is a social media. So what happens? Well, fewer ads, lower price per ad. Of course, the revenue for Snap isn't gonna share about that in the short term. And the market is very, very focused right now on the short term. I use that to my advantage. I buy when the market overreacts and look in the long term. Focus on the long term. And in Snap's case, I mean, will the economy do better in the future? Will we pass this recession? Yes, we will, I think. That's how the economy works. It goes down, then it goes up again. Then it goes down, it goes up again. And continues like that. And in Snap's case, that means when the economy goes up again, the advertisers will come back. More advertising, higher prices on ads. What will happen with Snap's revenue then? Well, it will increase. I think it will increase quite a lot. That's the simple reason why I buy Snap when it falls. Because there is nothing wrong about Snap. The users are going, they have more users now than 1 year ago. It's nothing wrong with Snap. It's wrong with the advertising, digital advertising market. And it's wrong with that right now. It's weak. But it won't be weak for the rest of all time. It will change again, like it always has before and will do again. It will go up, it will go down. Now it has gone down, and the market is very short-term focused and lower the price on Snap. Like it's the end of the world, almost. I don't see it like that. I use this to my advantage. I look ahead, I look 1, 2, 3 years ahead and think, how will the economy look like in 2 or 3 years? Better, I think. And what will happen with Snap in 2 or 3 years? The revenue for Snap will increase, I think. What will happen with Snap stock's price in 2 or 3 years? It will increase, I think. It's not so difficult. You just have to think different than the market. and be a little more focused on the long term, not the short term. But use the short term overreactions for your advantage. That's what I do. Think about that. It's not that hard. Then you just have to have a bit of patience and of course choose the right stock. In this case, I think Snap is the right choice, because I think Snap right now, or a week ago I mean, and even so now, is quite low valued. It's not the cheapest stock, but it's not that expensive than it was before. So I think Snap is a good choice. That's why I have invested in it. But as I said, I have 23 different companies in my portfolio. I can afford to be wrong about Snap, and even if I am, the portfolio still can make good money. But I don't think I will be wrong about Snap. Almost 400 million people uses Snap every day. Something big has to happen if Snap won't make it. But there is always a risk, of course. That's why I don't just have Snap. I have 23 different stocks in my portfolio. With stocks, there are risks. It's that simple. But I think in this case, it will work out just fine. I just have to have some patience and wait until the economy turns around. Then the stock market will turn around. The stock market is always acting very fast. The stock market will increase before the economy will increase. So it doesn't have to be that far away as 2 or 3 years. It can be 2 or 3 years, but it can. In best scenario, maybe just a few months before the stock market will increase again. And Snap will be one of the stocks that increases a lot. Well, we'll see. We'll see. I'm happy that I invested extra in Snap last week. It will be very exciting and interesting to follow Snap on its way ahead. But as I said, I have 22 different stocks, other stocks than Snap. So I have a lot to talk about. Just follow my channel and you can hear a lot about it. Thanks for watching this video, and if you want to, I'll see you again. Bye for now.